Welcome back, grade 11s. Our next topic will be on inventory systems. Now, you've already done perpetual system since grade 9, but you were not really aware of that system that you were using. But now we tell you it is a perpetual system, and we introduce you to the new system that may be used to administrate your inventory, which is the periodic inventory system. So let's see what we have for you. Inventory system. What is an inventory system? Admin system that monitors and records the movement of. Remember, this whole thing is about inventory. How do we keep track of our inventory? How do we record that? From when we purchase it up to sales. We have two possibilities, the perpetual inventory system and the periodic inventory system, where the periodic inventory system is now the new one. If you look at the perpetual system, the one that you've been using up to now, we know that the movement of stock is perpetually during the year is recorded in the trading stock account. So in the trading stock account, if we buy stock, we will debit. If we sell it, we will credit it. So we buy cash and on credit and in the petty cash. We sell cash and on credit. We return, or debtors return to us, cost of sales, and then we will return again to our creditors. And then the owner can take stock for his own use. But then we will have a balance on this trading stock account. So if we want to know how much stock on hand, we can just go to the trading stock account in the perpetual system, what we've been doing up to now. At the end of the year, we count the stock in order to compare it with the balance on this trading stock account. And then the difference is the trading stock deficit that will be shown on the statement of comprehensive income. Cost of sales will be calculated and recorded with each sales transactions. In the CRJ and in the DJ and in the debtors allowance journal, we have a cost of sales column. So each time we sell either cash or on credit, we will also record the cost of sales. When the debtors return goods, we will record the selling price, but we will also record the cost price. If we get to the periodic inventory system, this is now the new one. Now the movement of stock is recorded in a purchases account, but not the sales of trading stock, but only purchases and then returns to our creditors. The purchases in the CPJ, petty cash journal, and in the CJ will now be shown in a purchases column and not in a trading stock column. At the end of the year, we count the stock to determine, not to compare, but to determine the stock on hand. We do have a trading stock account in the periodic inventory system, but it's only there to show the opening balance and the closing balance. And we only know how much stock we have on hand by counting. So that is to count, and then the last difference, the cost of sales are now not recorded with each sales transaction, but we calculate that at the end of the year. Like I've shown you on the previous slide, in the CRJ and in the DJ and in the debtors allowance journal, we will now not have a cost of sales column because we don't record the cost price of what we sell with each sales transaction. It will only be done at the end of the year. If we look at the CPJ, where we buy the CJ, buy and credit, the petty cash journal, as well as the creditors allowance journal, we normally have a trading stock column in each of those, but that will now be replaced by a purchases column. So if I purchase trading stock cash in the CPJ, there will be a purchases column that I put it in. Same for the CJ, the same for the petty cash journal. Calculation of the cost of sales. How do I calculate? Remember we said we must now calculate the cost of sales at the end of the financial year. How do we do that? We say cost of sales equals our opening stock, which we count at the end of the previous year. So this is what we start with, plus the purchases, cash, credit, all purchases, minus the returns, plus the carriage on purchases. In the perpetual system, we added the carriage on purchases to the trading stock account. In this case, we use that to calculate the cost of sales, and then we subtract closing stock. So if we start with, it makes sense, because if we start with stock at the beginning, we add everything that we purchased, we subtract what we returned, we add the carriage on purchase, and we subtract what is left. Where's the rest? We sold it. And all of this is shown at cost price. So then we can calculate the cost price of what we sold. We're going to look at activity 1. That will be on page 10 in your activity book, and in your answer book, page 7. Mandisa Stores is a retail business that buys and sells sporting gear and clothing. Please remember to read that first sentence, because here they give us information. Mandisa applies a 50% markup on all their products. First question, a theory question. How does the periodic system differ from the perpetual system? Obviously, we've just shown that the movement of trading stock will now be recorded in a purchases account. The trading stock account will only reflect the balances beginning at the end of the year. We won't have the trading stock account being altered during the year. It will only have an opening balance, because we know how much stock we have at the beginning by counting the previous year, and then at the end of the year, the balance at the end of the year, because we counted. And then cost of sales has to be calculated in the final account, which will be the trading account. What they expect from us, we have to calculate the cost of sales, we have to calculate the gross profit, and then they ask us questions on the markup percentage, and then they ask us a question on Mandisa, the owner, who is concerned about the high transport costs. So the first one, calculate the cost of sales. So obviously we know cost of sales equals opening stock. There's our opening stock given, plus purchases, cash and credit. They don't show any returns there, plus carriage on purchases, plus the custom duties. Any other costs involved in order to get the trading stock to your business must be added. And then we will subtract the closing stock, which they didn't give us in information A, but somewhere in the rest of the information they will give that to us. This can be a calculation that you just write down pluses and minuses, but because there's so many calculations, we give it to you in a format like this. The opening stock plus the purchases plus carriage plus custom duties minus the closing stock will give you the cost of sales. So let's put in what we already have. They gave us the opening stock, 320,000. Purchases, remember it's now credit and cash purchases, 710,000 plus a 240,000. Carriage on purchases given as 162,000 and custom duties given as 56,000. So that's the information that we got from that first table. They didn't give us the closing stock there. Now we have to read through the other information. Information B tells us that a soccer kit was donated to a local school and the cost of the kit was 2,900. Remember, read whatever is in brackets. These transactions was not taken into account yet. So we donated stock, soccer kit will be stock. So we will debit donations and we will credit purchases. Because it's the periodic inventory system, we do not credit trading stock, but we credit purchases. So we must subtract that 2,900 from our purchases, because that was stock that was donated at cost price. The second one, a debtor returned merchandise which he bought earlier for 3,000. Now we know we're not looking at the cost price, but the debtor's allowance will increase. We already have a 43,000. There's a 3,000. But debtor's allowance has no influence on calculating the cost of sales. We will use this in order to calculate the gross profit. Information C, an invoice that we received on the 25th of February has not been recorded. They give us the total purchases, less the trade discount. We know we don't make an entry for the trade discount, so we know purchases must increase with a 37.80. And then they give us transport costs, and we know transport costs must be added to carriage on purchases. If this was the perpetual system, we would have entered the 32,580, everything in the trading stock account. But in the periodic inventory system, we have to distinguish between purchases and then carriage on purchases. So we have to add, let's go down to our calculation, the 3780 that we purchased, as well as the carriage on purchases that was not yet recorded. So we're done with information C. Information D, according to the stock count done on the 29th of February, stock on hand was valued at 210,000 cost price. And that was after they've taken A, B, and C into account. So there's our closing stock, 210,000. So we know where that puzzle piece go. Closing stock, 210,000. But there's still more information. Information E says that after the stock date was completed, 3,400 had to be returned to the supplier due to poor quality, and a debit note had been issued for this amount. So we counted the stock 210. After that, we returned stock to a creditor 3,400. So obviously that 3,400 must be subtracted from the 210 because we don't have it anymore. Plus that 3,400 must be subtracted from purchases because that reflects returns or creditor's allowance. So our purchases will decrease because we returned 3,400, and our closing stock will also decrease because this was done after the stock take. And then the last information, F, Mandisa, the owner, also remembered that she had taken some stock, 1,400 home for the children, again after the stock take was completed, and she forgot to inform the bookkeeper. So that 1,400 must also be subtracted from the closing stock. We've counted, and after that, the stock decreased. And then we know when the owner takes, we debit drawings and we credit purchases. So purchases will also decrease. Purchases minus the 1,400 and closing stock also minus the 1,400. And if we do our calculation, 973,080 for purchases, carriage on purchases 163,800, custom duties did not change, 56,000, and then if you add that 1512880, closing stock 205,200, but this must be subtracted in order to calculate the cost of sales, 1.307680 million. So there is our cost of sales. Now they ask us to calculate the gross profit. Now gross profit for periodic and perpetual system stays the same. Gross profit equals sales minus cost of sales. Now we've calculated the cost of sales. Now we must calculate the sales. From the information given, they gave us sales. So now we're looking for the cash sales, the credit sales, and we need to subtract the debtor's allowance because we need our net sales. So if we calculate that, we got our sales. And then we just subtract the cost of sales. So if we go down and gross profit, if we first calculate our sales, 1,024,500 plus the credit sales minus debtor's allowance and minus another 4,000. And that will give us a 1,829,500. So that's the sales. Minus the cost of sales that we just calculated in order to give us the gross profit, 521,820. Obviously this will be a method mark because you've calculated the cost of sales. This one you will have to calculate. So that can give you 5 marks for that one. But please always show your calculations. The next question, we have to calculate the actual markup achieved. So what percentage is the gross profit on the cost of sales? That's actually what they ask us. That is markup percentage. The gross profit, we just calculated that, 521,820. Divide by cost of sales. We've calculated cost of sales, 1,307,680. We want to calculate a percentage, so multiply by 100, 39.9%, almost 40%. Now this will be one where you get 3 method marks, because you had to calculate the gross profit in the previous question. You had to calculate the cost of sales in the previous question, and if you calculate that correctly, you get your 3rd mark. The next question they ask us, we have to supply 2 reasons why Mandisa did not achieve their intended markup. You remember when we read the information at the beginning, it said that the intended markup percentage is 50%. That means they mark everything at cost price plus 50%. But now at the end, when we calculate the markup that we did achieve, we say, see, it's not 50%. Why not? Obviously, we gave trade discounts. It can be that the goods were sold at cheaper prices due to sales or specials. We want to get rid of some of our products, or some of our products are slow sellers, therefore we give specials. Buy 2, get a 3rd one free, or get 25% off if you spend more than a certain amount. So obviously then we did not sell everything at cost price plus 50%. And that will cause our markup percentage achieved to be only 39.9%. Can also be that there's errors in the markup calculation or errors in recording our stock movement. Then be careful for this one. If you just carry on the answer sheet, you read the next question. Is there a way you can think of to solve this problem? Explain. And you've just answered this one and then you think this was the problem, but this wasn't the problem. You have to read from the question paper. And in the question paper, the question is, let's go there. And then suddenly it makes sense. Here's question 1.5. Mandisa is concerned about the high transport costs she has to pay on stock purchases. Is there a way you can think of to solve this? So now it makes sense. It's about the carriage on purchases. This 162,000 plus the additional amount of 1,800. So 163,800 that we have to pay on carriage. And now that is her concern. And now the solution can be that we can look for cheaper service providers that will also deliver the same quality of service. And then we can also consider buying our own vehicle. Then we can do our own deliveries and also collect our own stock, but we must just make the calculation very carefully to see if this will benefit us, because we have operation costs. We have to pay for fuel, we have to pay for insurance, we have to pay for repairs, maintenance on the vehicle. And will that make a difference on the cost, transport cost that we pay on purchases? But yes, we can also look for a cheaper supplier, service provider for this service. That was on inventory systems, and I really trust that this helped you with understanding the difference between the perpetual and the periodic inventory system a bit better.